What's happening in China right now could spark the next global financial crisis, and this time the consequences may be even bigger. To understand how we got here, we need to rewind and look at how China's real estate boom took off. Over the last 2 decades, China's rapid urbanization has been staggering. Millions of people moved from rural areas into the cities, seeking better jobs, higher wages, and a modern lifestyle. To meet this growing demand, the government issued massive infrastructure projects, from roads and airports to entire new cities. Developers began building at unprecedented pace. From 2009 to 2020, China's urban population grew by over 300 million people. That's the equivalent of building a city the same size as New York every year for 20 years. And it wasn't just housing, the whole economy was geared towards real estate. In fact, real estate and construction now make up about 30% of China's GDP. What a great success story, hey? Well, unfortunately, this is where things start to turn south. Much of this growth was driven by speculation. Developers weren't just building homes for people to live in, they were building massive ghost cities, entire neighbourhoods where lights never came on, as the expected demand for these cities never came. The sad reality is that people were buying these houses not to live in but as investments, hoping to sell them at a higher price later. Sounds extremely scary if the demand never materialises, eh? Fast forward today and the cracks are visible for all to see. Across China there are countless ghost cities, vast stretches of high-rise apartments with no one living in them. Construction projects are being abandoned midway, leaving behind eerie, half-finished buildings. Developers are running out of cash and home buyers are losing confidence in the market.
At the end of 2023, home prices in China dropped to their lowest point in nearly a decade.
Not a good sign. One of the biggest warning signs that we've seen recently was the collapse of
China's Evergrande.
One of China's largest property developers had over 300 billion in debt, an amount so staggering that it sent shockwaves across the whole Chinese financial system. And while Evergrande may have been the biggest domino, it's far from the only one. By mid-2023, it was reported that about 40% of Chinese developers had defaulted on their offshore debt. The collapse of these property giants is not just a local issue, it's rippling across the whole entire financial system. Sounds very 2009-esque to me. This is where things are even more serious. Major banks around the world are starting to get nervous about their exposure to Chinese real estate debt. According to the Bank for International Settlement, global banks have nearly 1.8 trillion, yes trillion, of exposure to China. And it's not only Chinese banks that are at risk here. Big names like Credit Suisse, Deutsche Bank, Standard Chartered, Citi, HSBC and JP Morgan have significant exposure to China's economy, including its real estate sector. Many of these banks are now starting to set aside provisions for potential losses as Chinese property developers struggle to pay back their debts. HSBC recently reported that it has 3.2 billion in credit-impaired commercial real estate loans to Hong Kong clients as of the 30th of June 2024, up from 576 million 6 months earlier. This is no small issue. If these defaults continue to spread, we could see a cascading effect where not only Chinese banks, but also the global financial institutions start to struggle, just like in 2008 when Lehman Brothers collapsed. The interconnectedness of the global financial system means that a crisis in one sector can quickly spread to others. This could have a ripple effect across the whole entire global financial system. China is one of the world's largest economies, and a significant slowdown there would hurt global trade, particularly for countries like Australia, Japan, Germany, who rely on Chinese demand for their exports. Financial markets could also take a hit. Many global investors have exposure to China, whether that's through stocks, bonds, or real estate investments. If property values plummet and Chinese developers can't pay their debts, we could see a sell-off in the global markets, triggering a broader financial crisis. Sound familiar? It should.
When Lehman Brothers collapsed in 2008, it marked the beginning of a global financial crisis.
We've had a historic day on Wall Street. Lehman Brothers, the 158-year-old firm, filed for Chapter 11 protection in U.S. bankruptcy court today.
In 2008, the housing market collapsed under the weight of bad debt and speculative investments.
Now spreading throughout the U.S. economy. The system's not designed to function in an environment where house prices are going down.
Banks were over-leveraged and the ripple effect of that collapse was felt worldwide. The global financial crisis that followed left millions unemployed, destroyed trillions of dollars in wealth, and took years to recover from.
The system had stopped.
China's situation today bears some striking similarities. Both booms were driven by cheap credit and over-leveraged institutions. In both cases, financial institutions assumed that property prices would keep rising forever, and just in like 2008, China's real estate sector has become too big to fail. The Chinese government have been trying to manage the situation. They've introduced policies to cool down the property market, like limiting how much developers can borrow and tightening restrictions on speculative buying. But many experts believe that these measures might be too little too late. If the real estate bubble bursts, the consequences may be devastating for China and the global economy.
Homebuyers are afraid of not getting the home that they paid for.
The problems China have now are deep-seated structural ones.
I think the consensus is already that for China, the property sales may not go back to yesterday.
To me, the question isn't if China's real estate market will collapse, it's when and how bad the fallout will be. Now, if you want to know how you can protect and also grow your assets in the next recession, watch this video here. Likewise, this video here is talking about the alarming indicators that we're currently experiencing. Thanks for watching. If you found this video informative, make sure to hit that like button and subscribe to the channel for more insights on the global economy, finances, and the forces shaping our world.